This segment is going to look at the classified balance sheet. Recall that a balance sheet is prepared to report the company's assets, liabilities, and equity on the last day of the accounting period. The classified balance sheet takes that basic balance sheet and creates new categories. Those categories are really based on the length of time that an asset is held or the length of time before a liability is paid. Within the assets section of the balance sheet, the classified balance sheet classifies assets by whether they are current or non-current. Current assets are assets that the company has that they intend to use up or convert to cash sometime within the next year or current operating cycle. It breaks out all other assets into categories titled plant assets, which are the tangible assets that the company purchases with the intent to hold onto and use them in the production or sales of products and services. The intent is to hold on to those assets for beyond the next year. Thus, they are classified separately from current assets. Examples of plant assets include equipment, machinery, buildings, and land. These are often called property, plant, and equipment. The other assets section are intangible assets, and these are assets that are long-term resources benefiting the business's operations, but they lack physical form and have uncertain benefits. They are intangible. You can't see them, you can't touch them, you can't feel them. Examples include patents, trademarks, copyrights, franchises, and goodwill. These will be examined in a little more detail later on. Within the liabilities section of the classified balance sheet, we classify the liabilities whether they are current or long-term liabilities. Current liabilities are liabilities that have to be paid or settled within the next year or the next operating cycle, whichever is longer. And long-term liabilities is debt due to be paid off or settled sometime beyond the next year or operating cycle, whichever is longer. So looking at the balance sheet classified for the ABC company as of December 31st of 2019, they have broken their assets into these new categories: the current assets, or assets that they intend to use up or convert to cash sometime within the next year or current operating cycle. And they have separately identified their plant assets, their property, plant, and equipment. This is the asset that they intend to hold on to beyond the next year and to use in their operations to help generate revenues. Within the liabilities section, we are seeing that they only have current liabilities, but they have listed them as current. In other words, all of these liabilities are expected to be paid sometime within the next year or due within the next year. They would list out their long-term liabilities separately in a separate section if they had any. And down here we're seeing that the classified balance sheet does not affect equity in any way. Equity is still reported the same. So really the only difference in a classified balance sheet is breaking assets into these new categories of current and property, plant, and equipment. And if we had intangible assets, they would also be listed in a separate category as well. And down here within liabilities, we are seeing the current liabilities listed separately, and long-term liabilities would be in a separate section if they were existed and needed to be reported.